So, Ponch, as you know, I had a long career in asset management wholesaling, and it was a fun, exciting life. The volatility, uncertainty, complexity, and ambiguity of markets was a great place to apply the theories of John Boyd daily. And I learned really quick that I can't sell product. I had to sell myself. And how I sold myself was by teaching people Boyd and teaching people orientation and OODA and how you reorient and how you get feedback and how you create snowmobiles. And it was in that process of being delirious of all the product and everything out there that I knew something always felt off to me, that a friend of mine said, "Have you ever heard of trend following?" I go, "No, what the hell is
Mm.
trend following?" So he gives me this book, who one of our guests today is
Mhm.
widely featured. And he gives me this book and I start reading it, and it's like literally the polar opposite of everything that they were teaching me and my peers to wholesale funds inside of financial institutions. I'm like, can we get shot having this information? Does this really work? I end up getting this book. As you can see, it's taped and copied, and the marginalia is drenched. Chapter 28 was a cruise missile against the industry that I was in. And here we are today talking to two very well-known trend followers to have a conversation with us about the connection between what we see from where we come from the theories of Boyd and flow and other things, to a style of investing that almost nobody talks about, that you're not going to see on the news rarely, that you're not going to see in popular financial media, which I like to call financial porn.
Yeah. Moose, I want to add something here. Trading is combat. We know that, man.
Yes.
The market is a flow system. You just brought up flow and the connection to the John Boyd OODA loop. I cannot think of a better way to, you'll never master the market, but you can increase the probability that you're going to have success if you follow John Boyd's real observe, orient, decide, act loop. And I think that's where we're going. So,
Yep.
Moose, I know you spend a lot of time on Wall Street. I haven't, but I do a lot of work on my own. And I find that one of the reasons we trade, maybe two reasons. One, it allows you to get into a flow state. And two, nobody's going to handle your money better than you are, right? We hand off, you don't hand your kids off to somebody else to get, well, some people do, to go raise them. We buy insurance for our house and our cars, but we never, ever, ever learn individually how to trade and how to master the market, or how to learn how to increase the probability in the market. And I think that's what the OODA loop teaches you. So back to you, Moose.
Yeah, Jerry and Mike, Jerry Parker and Mike Melissinos, thanks for joining the conversation with us today.
God,
Thanks
thank
for
you
having
for
us.
having us.
So let's start at the biggest picture. Like I said, I learned of this trend following at age, I don't know, 44, 45. I immediately wish I would have read the book when I was 13. I gave it to my children, so hopefully they could they could have a different course. What is it about trend following that is so radically different to the point where almost nobody talks about it or nobody thinks about it?
I'm gonna let Jerry go because he literally has a lifetime of experience more than me.
Well, I think it comes across as a pretty straightforward and easy to understand concept and idea. And then it starts tapping into sort of things that humans don't really like to do. And you sort of embrace that, like, oh wow, I see how that could work. It's really counterintuitive, and it's making me or asking me to do things, take small losses. I don't like losing. I like one tick winners. Give me a winner of any kind. Seeing profits run, it sounds good, but then when you get into it, it's really difficult to do because all that profit that you've accumulated could go away. And I think it's objective and not subject to discretion, which we all have this experience and that we want to tap into. And a win percentage of 40%, which is like no fun at all. And so you can either embrace all of these sort of negatives and say, well, this may be the reason it works, and because it's hard to do, and it really calls me to another level of what works in them. I shouldn't expect what works in the markets to make me feel good. If I can survive and take money out of the markets, that might be all I should be expecting. But or you can reject it, and I think that's where that comes in. It must be something better. It gets rid of the drawdowns. It certainly makes the losing percentage of at least 60% or so, better than that. So, and I think that it's easy to reject the difficult, narrow path. We're always asking people to eat more broccoli, and that's just not what's in fashion usually.
We could
Yeah, I
see
think
why it would appeal to contrarians like us. How did you're featured in this in the turtle traders? You were one of the original turtle traders. What had you been doing before that to share with our listeners? And then what was it that clicked for you to say like, wow, I'm going to do this. And then I need to stay doing this because you've done this your entire career.
I was in public accounting in Richmond, Virginia in 1983. And I saw the ad in the Wall Street Journal to come to work for Richard Dennis, and he would teach you how to trade commodities and futures and then give you money to trade. And so I thought that was a pretty good idea. I thought it was legit because I'd seen an article about Richard Dennis, and I had spent a past year or two studying trend following. Just randomly, it hit my radar, and I had watched Wall Street Week and Marty Zweig was a frequent guest on there, and he was about diversification and trend. And so I had spent a lot of time really studying. And then when I got the response back and the true false test and started the process saying, trying to get an interview, I was just hoping that those guys were talking about trend following. I didn't know for sure, but and so I thought trend following was great. When I was 20 some years old, I thought it was great when I first read about it. And then I fell in love with it every day since then, more and more. It gets better and better every day. And I just thought, yeah, it's objective and it's rule-based. And that sort of, I guess, maybe clicked with me as an accountant. And then I looked at the charts and I was like, yeah, I can understand this. If the infrequent big winners pay for all the losing trades, then things will work out pretty well. And that's sort of naive, but in the same way, it's really the essence of it too. Are they going to pay for it? And you need to figure out a way or have someone tell you, like me, how to pursue a strategy and in a way that will hopefully ensure or tilt the probabilities in your favor that you will get enough of those big trades to cover the losses.
Mike, how did you come into trend following?
Well, first, hold on. I want to bring up, you fall in love with it every day more and more. April was tough to love it then, getting rocked by the tariff-related whipsaws. That I remember having coffee with Jerry that week, and we were a little, had the 1,000-yard stare sort of thing going on because the volatility and the whipsaws were so extreme. But I just want to go back for another second about what makes, trend following hard, or what makes people not maybe attract to it as much. I mean, I think in general, trading, investing, whatever you call it, managing money in general is hard and not comfortable. And I think there's plenty of evidence on this that, for the everyday investor, even up to the pro level, the approach they all know and love, maybe when you were working in the business, telling people that, hey, stocks go up, this is the story, just keep investing month after month, hold on no matter what, this is what we believe, and this is what we're here to capture, this ever going uptrend in stocks. Okay, well, even that's hard. It doesn't mean people do it. Okay, I understand that. That sounds lovely. Until you get crushed, until you start taking some pain, and then you're like, well, maybe I don't know if I believe that anymore. And then maybe, my situation's changed and my risk tolerance changed. I don't like this, and then you start medicating your feelings with selling out when you should be selling out, and all those types of things. So I think whatever you choose, whatever approach you go with, even if it has long-term validity, doesn't mean it's going to be some joyride. I don't think so. Markets are chaotic and dangerous at times, and uncomfortable. So, whatever you go with, you just have to make peace with, all right, well, this is what we do here, and this is how it works. And we're always aware that something can go wrong, and hey, maybe historically something that has never happened before happens on my watch. That's just life. And so I think, but maybe with, when it gets tough though, in the tough period, you kind of have that belief, the equities crowd has that belief of, well, okay, I believe that stocks are going to go back up. So, okay, this is fine. I'll buy into this. This is okay. I can get back in easier or something. I don't know. I don't even know if everyone does that, but that just could be some of the internal chatter that goes on. And with trend following, you have to believe that trends are going to still continue occurring. And I don't think a lot of people get there. they don't understand why they need to have a story, a fundamental driven story on why, trends are going to keep occurring, commodities, currencies, and all these other markets that we trade. So, that it just might not occur to them. So it's just, if they try it out, they might not stick with it because it doesn't give them that story, that warm blanket they need when they're taking some pain. I don't know. That makes sense.
Yeah, that totally makes sense. I mean, what we would say when we're advising clients about orientation, we all have one. We all have one individually. It's fractal. We can have one collectively to create a podcast or a fund or anything. At some level, you share orientation with your investors. And it's important to note that orientation shapes or implicitly guides and controls how we observe things. So it's very clear to us that in a trend following mindset or trend following frame of thinking, a trend following orientation implicitly guides and controls or shapes a view and sense making within markets that is remarkably different than just about every other actor out there. And thus the differentiated results.
Yeah, I think with trend following, we always know, we're, I guess, maybe frequently, emotional, or, we have some emotion going on, but it's, maybe for, guys like me and Jerry, we're not confused about what to do. We know what to do. We have our rules staring at us right in the face every day. So that's nice that we have that. We know exactly what to do. We believe in it because we've done all the work that okay, these rules have long-term validity, and we've tested them many different ways on, in and out of sample, different time frames, yada yada yada. So okay, we feel cozy with that, but it doesn't mean our emotions go stay nice and even no matter what the P&L does. No, that can happen, but it's not enough to abandon ship and, what, that looks nice over there, let's go try something else. No, because then you're just in chaos, giving into your feelings all the time. No. So yeah.
But at the same time, you'll let go of something if you believe it to be wrong. How do you walk us through the discipline of that? Like when something doesn't fan out the way that you wanted to or believe it to, talk us through the discipline of being able to cut your losers and move on.
I think for me, that's pretty much one of the easiest things for me to do, is to cut a loser.
Mm-hmm.
I don't feel that this is a loser. I don't know what I'm doing, because if I knew, I wouldn't have taken this trade in the first place. Because see, if I was smart, I would have been able to avoid this one. No, you don't. Like, no one knows. That's another belief that we have as trend traders. We believe that we cannot know the future at all. So we take these small, calculated, low risk bets and say, okay, let's see. It's like planting a seed in the garden. We don't know if this one's going to work. We're not putting all of our eggs into this seed to, feed the whole family for generations. Just, let's try it out and monitor it. And hey, if it doesn't work out, no problem. That is maybe hard for people to get to. I don't know. I don't want to talk for Jerry, but I suspect it's the same for him. It's pretty easy just to cut losses and just say, okay,
move on.
Yeah, because we don't have some hardened belief about, our ego or something about, if we knew, if we were smarter, we would have been able to avoid this or something like that. Or I don't know.
I was taught that the most important thing, is you got to put the trade on. There's nothing more important, because you're going to miss that big trend if you don't. And the 5 to 10% of the trades each year that are going to turn into all the profits, you can't miss one of those. And so right out of the first week of trading, I was not taking all the trades, right? That's just, I don't know why, but so I guess in some respect, I was a step ahead of the game. I was so afraid of taking the loss that I didn't want to do the trade. But once I was putting the trades on, then I was happy to take the loss. I don't know why that wasn't a struggle, but the struggle for me was just putting that on. But the odds are, it's just the asymmetry of it is so crazy, because you're going to have this predefined small loss before you put the trade on. You've got your exit and your percentage of your capital that you're going to lose, 50 basis points 10 basis points. It could be something really small, depending upon how many markets you trade. And then you'll miss something like cocoa or the stock market. We trade the stock, the stocks or stock futures as well, or gold and silver. And then you look back on that trade, and let's just say as a trend follower, for some reason, you just didn't take the gold and silver trade. And you look back and you say, I was going to risk 50 basis points for all of this wealth in gold and silver and so it's really ridiculous. So over time, you just experience that, and hopefully you haven't had any good experiences by not following the rules to lean on. And so you build up this history of regrets that informs your behavior in the future.
What was it? So, with Ponch's background as a naval aviator and mine as a Marine officer, we've gone through very exacting transformational programs that weed out all of the people that can't hack, or shouldn't be there. So I'm wondering if you walk us back to that very initial time where you gathered with Richard Dennis and everybody in Chicago. What do you think was the major difference between yourself and your path and others? Like, what were the things that they weren't able to handle or accept that sort of filtered them out or weeded them out, if you will?
Yeah, that's a great question. I've often used this really bad analogy, which is, you can't really become a Marine just by being given the handbook. You got to go through basic training or whatever. And
You got to go
can
through
become
hell.
Yeah, exactly. And so the advantage you have too, when it's all said and done, you're like, yeah, I can't imagine just being given a manual or a set of rules. And the same with us. We had a great set of rules from great teachers and genius people and very nice people too. I mean, these are the nicest, smartest people you've ever want to meet. They had broken new ground on using computers in the 80s and doing back testing and understanding math. Bill Eckhart is probably one of the smartest people I've ever listened to that I didn't really understand much of. But just being put in that kind of pretend environment where they would say things like, do the hard thing, do the right thing, and you're going to be fine if you follow the rules. Now, these are our rules, but if you follow the rules and lose money, you're fine. If you don't follow the rules and you make money, you could be in trouble with us. And then after just a few months of trading, everybody had lost a lot of money by following the rules, some better than others, but about the same amount. And their response was, you're following the rules, you're doing the right thing, here's more money. No one does that in real life. No one encourages you like that and says, look, concentrate on one thing, follow these rules and be disciplined, and things will work out in the end. When you get into the real world dealing with clients, they're the exact opposite. Look, if you have to cheat, use discretion, don't follow the rules, specifically to make money for me, fine, go ahead and do it. Whatever it takes. I don't, sitting through these losing trades and these bad periods, this is horrible. And I don't like your system. So this was this sort of great way to start your career. And then another thing I don't really remember exact, but I remember leaving there with a huge skepticism of clients. Clients and other people are going to steer you in the wrong direction. They're going to ask you to take these shortcuts. They're going to criticize you for losing when you're doing the exact right trades that you should be doing. So I couldn't have been and I couldn't imagine not having that experience with those guys. But look, you know what? It's no surprise that the secret of the success of some and the lack of maximizing the possibilities that others experienced was just how much did you follow those rules? And did you really believe those rules? And then when you got out on your own after 4 years with Rich and Bill, were you still dedicated to at least the philosophy? They taught us an enduring philosophy of how to maximize trading life, not just, and they would just say, look, these specific rules or parameters, they're not going to last forever. You're going to have to evolve and adapt over time. But it was deeper than that. It was the philosophical way of looking at markets and looking at life and knowing what to expect, and that you should expect pain and suffering when you're doing the right thing. Once again, going down this narrow path of excellence. Quite an experience. And it's really, I think, the one thing that never got written about was how smart they were and how nice they were.
Mm-hmm.
I learned that lesson too, about seeing people for the first time who were just incredibly nice and didn't treat us the way we deserved to be treated.
Remind us the size of the original cohort of turtles.
So in 1983, December of 83, they hired 12, and the next year was 8. So it was around 20. There were some that we didn't really know, that weren't in our office. And there was 1 or 2 in our office that really weren't turtles, but just sort of friends. There was a lot of friends hanging around, especially in the turtle class. Half the room was just brokers of theirs or friends of theirs. Yeah, come on in, sit in, see what you can learn.
So this is the other thing that's always blown my mind about trend followers is their willingness to talk, their willingness to mentor, their willingness to teach, their willingness to explain, not only through books, but replying to emails, groups. Jerry, I used to attend your group. I can't remember what it was called. It wasn't on Twitter Live, but it was
It was Spaces.
Spaces or something like that. Yeah, I mean, like the willingness of people, the accessibility to learn and mentor has always really struck me as a very stark cultural difference in an industry also that's usually guarded by arrogance and secrecy and other things, that the trend followers are almost the opposite of that.
Yeah, that's good. It's nice to hear. I was in it with a group of CTAs recently, and someone brought that very idea up that he had had lots of experience dealing with finance, with other types of strategies and funds and hedge funds, and that trend followers were still able to sit around and have a coffee or a beer and talk about and be cordial and wish everybody the best. I do think that we disagree a lot in the philosophy on how to handle it and how to do things. But
Give us more
and people
about that. Tell us more about that.
well, I think Mike and I come from more of a classic background of taking small losses and having a
Well,
stop loss.
I think the new element that's involved with maybe some of the changes that some of the trend followers have made in recent years, especially I think since I think the business model changed then, and I think the business model and influenced the trading models, and that was to gather more assets, appeal to more people, make trend following more palatable for people to handle, and that I think spurred a lot of the work around changing the historical techniques.
Like made it too commercial or too commodified or?
Jerry gets really charged up about this, so I'm going to let him fire.
Yeah, let's hear it. Light it up.
Well, I think it has evolved, and I think just getting back to the basics. Are you going to have a stop loss? This is kind of in question now. We'll exit. We'll try to exit. Try to keep losses to a minimum or not let them get out of control. But you're going to have a predetermined stop loss. Maybe, maybe not. Are you going to let profits run? No. This is not letting profits run. We can't really do that. We need to scale back our winning positions due to increased volatility or correlation. I did a calculation the other day, just a simple calculation based upon the increase in volatility in silver. And I would say that it would not be unheard of that sort of the typical managed futures CTA is probably out of 80% of their silver and proud of it and been selling every time there's a big day up. And so Mike and I are like, no, we're going to let the profits run. We've done the research. We've done the back test. This is a big change too. Risk is that potential loss we had, the 50 basis points. And so silver's got a monster profit. We don't have that anymore. And the industry has sort of changed into no, loss is the daily fluctuations, negative or positive. This is now redefined as risk. And that sort of takes away the underpinnings of how we learn trend following.
Yeah, I think what Jerry is describing, like the vol management, the daily fluctuations, we don't like that. People don't like that. They don't like giving back gains. Okay, well, let's not give them back then. Let's, every time, we get some gain, to a certain degree, whenever we run our calculation and we see some gain and now it's getting more volatile. Okay, let's take some off. Let's ring that register, as some would say. All right, well, that's inherently counter trend because the trend is still in favor, right? You're still long the thing, but you want to hold less now for what reason? Well, it's not the trend reason. So this is inherently counter trend. You're just calling it something else, vol management, and it's really feelings management. I don't care what they say. That's inherently what it is.
When did when you're both describing risk, I always thought of risk as the chance of the permanent loss of capital. And years ago when I was in the biz and I would go out to the Berkshire Hathaway meeting and Buffett and Munger would say essentially that the prevailing theme across the financial industry was that risk was volatility, just the mere ups and downs. But I rejected that because I followed what Buffett and Munger were saying, that no, risk is the classic definition of risk is the chance of the permanent loss of capital. But what I found in 15 years of telling people that, they thought I was a heretic. They thought I was crazy, but that seems to really align with what Jerry just said and what you just added onto, Mike, is that the very orientational definition of risk that I have, if I believe it just to be volatility, that's completely misshaping how I view and sense make inside.
That's right. I think what was good for Mike and me is that we came to trend following without having a quant background or like a heavy statistical and math background. I think a lot of the managed futures CTAs, they're coming from physics or statistics or heavy math backgrounds, and they need to cram that into their trend following. They cannot abandon it. This is a rejection and turning my back on everything that I've learned, all my PhDs, and it's just not going to happen. And I'm going to embrace everything that I learned and change the trend following to reflect that. And Mike and I did not have that problem. We came in not knowing anything, thank God, and being taught by people who knew a lot and were super smart, just as smart as anybody else I've ever met. And yet took that more straightforward approach of letting the profits run. And you think it's difficult for people to embrace trend following, retail or normal people. It's super difficult for people who are well-versed in math and with advanced degrees to simply do less and let the market and let the trends take care of it for you. There's lots to do. I think putting together the portfolio and devising your approach, but it is a shame that classic trend following is 1% of managed futures.
How much? So is another way to ask this question is that basically that the less you know about classical finance and modern finance, maybe the better you would be at trend following.
I think so. And some people, and I've seen evidence of that, they just don't ask all the questions.
Mm-hmm.
And I think that, definitely when we had so much success in the first 10 or 15 years, we were subject to that as well. Like, okay, what's next? We've already kind of conquered trend following. Let's make it better. What can we do? And we just got away from the principles and we had to backtrack. We would over optimize and see performance in our real track record that we'd never seen such poor performance in the back test. And then our response was, we got to stop this. This is crazy. But it is tempting because you read about everyone else is doing it. But I've told Mike before, when we do our back test on these approaches that we have that don't have a lot of moving parts, just one entry, one exit, and a stop loss, the track record is so good. And I've never seen a track record of any CTA as good as that. So they're trying to make it better, but it's really difficult.
Another one of my heresies in my career was learning and teaching mass psychology, particularly around behavioral economics and behavioral finance. And, my favorite book was The Art of Contrary Thinking by Humphrey B. Neal. And I found that the more that I read those things and studied those things, the clearer I saw it when I looked around how markets were crashing and people were behaving. Some places you were, quote unquote, allowed to talk about it. But what I've noticed, if anybody has studied mass psychology or behavioral economics, I think that from my vantage point anyway, that trend following actually is a really good discipline for someone that does know something about that, because I think that trend following ends up leveraging those things without falling victim to those things, if that makes sense.
Yeah, I agree. I think trends occur for all different reasons. It could be changing fundamentals, the dynamics between the, ever-changing fundamentals and the ever-present, human condition within the markets. People overreact, underreact. Things go way farther. Trends go way farther than you think. They don't go as far as you think. All the biases that have been well documented over the last 20, 25 years, especially, they get talked about every crisis. They'll get talked about what caused it, what traps we've fallen into. So, yeah. So like when and you have a set of rules to do, and it really tests and brings out your character, gives you entry points for, maybe I got to work on this, in order to do it, to do the thing, to do the trades, as Jerry mentioned just doing the trade. That's hard. That's just hard to do. It's, I've grew up in sports my whole life, going and working out and training my whole life. You learn so much about people the first day it rains. Go to the gym. 10% of the people are there. Why is that? When it's cold here in New York, no one wants to go out. No one wants to go do it. They don't want to go and layer up and brace the elements on the walk over to the gym and then have to walk back a little sweaty. It's going to be cold again. I'll just stay here. I'll just stay cozy. I'll make up for it later. I'll do 2 this weekend or blah, blah, blah. Those are all great entry points for, okay, you see what makes it hard. You see but that doesn't mean it's a reason to change it. No, this is what works. Hit the gym this times a week, eat your meals, sleep, blah, the whole system that would make you healthy. Hard to do, easy to explain. The premise, everyone gets it. Hard to do. So,
Jerry, I've often heard the metaphor a little birdie once told me, but you're living proof of that right now, that a little birdie came on your shoulder and told you.
Yeah. I was out of town yesterday, so she missed me. So she's wanting some love this morning.
Love it. Love it. Hey, Ponch, I have a quote for you. And there's 2 options. It was either Michael Melissinos that said this quote or John Boyd. The trend following philosophy is based on adapting to evolving conditions in the now. It's about learning from the past in order to make the right decisions today. The goal is not to eliminate losses from investing, but to manage them in a way that doesn't kill us.
That could come from either.
It could come from either, right?
Yeah.
I mean, John Boyd could not have said that better himself.
Let's break this down a little bit. So when you think about the OODA loop, and this is for our listeners, and implicit guidance control represents those processes, those habits and minds, those things that you need to do. Why do we have those things? Well, it allows us to get in a state of flow, to see the outside world a little bit better, and it helps us overcome our biases, which are part of our orientation, right? It was already brought up in this conversation that our heuristics or biases kind of limit our performance in markets. There's all kinds of biases out there, resulting, loss aversion, things like that. So what we need to do is you need a process, and this goes for teamwork too. Teams need a process of how to plan, which leads to better risk management, by the way, how to mitigate cognitive biases, which overcome those biases, which we call red teaming. And of course, you need to take action on the environment to get feedback from the environment. And what you do, you end up looking at your process. That's an implicit guidance control pathway at the top. You can see how it bypasses the deliberate approach from the middle. It goes through decision and hypothesis. What we want to do is develop a process that we can follow. And that's what trend following does. It gives you the process to help you bypass, we'll just call it the system 2 thinking there, and narrative 2. You want to avoid the narrative from the external world and just follow that. So I think what you're bringing up there, Moose, or what you just shared on the quote is, again, could come from either John Boyd or anybody in the trend following network.
If John Boyd was talking about trend following, wow, because he led the quote with trend following is so.
That's
we know it was you in this book.
On
page 90 of Michael Covell's Trend Following. You're quoted on there, but it's what resonates with us, Mike, is that one, you told me when we first met that you were quoted in that book, and of course I had that book and I looked it up, and I looked at it and I said, well, Boyd could have said that. So it goes back to what I've long been thinking about trend following, is that the knowledge and understanding of what it was that Boyd was teaching. It only works where humans make decisions and act. Yet trend following is a really good example because that central part, the orientation, is so uniquely different. You and I had talked about, the cultural, at the cultural level, at the philosophical level, that distinction alone, that difference alone implicitly guides and controls, you see there on the top, or shapes how we sense and how we act. And I also think the other thing that's remarkable with trend following is that, and it's in a lot of the literature in either the Total Trader book, the Complete Total Trader, or in Trend Following, is that decisions are hypotheses of what you think will happen, and you test the actions are tests. So the correlation to what Boyd was teaching, and that the Marine Corps bought into it and reevaluated its entire warfighting doctrine based off of these concepts. The example of trend following to depict what it was that John Boyd was teaching and continues to teach, and that's our professional work with trend following. It's uncanny. And when you go through it and you read it, and the deeper that you read it, I also think too, Ponch, I don't know if you thought about this, but trend following is the ultimate generalist that looks at all markets, and they can go in any direction, not just a very specific piece of the market, or not just in any particular direction. They can go long, they can go short, they can go into commodities, equities, bonds, cash, you name it. Like they look at the market as an entire system.
Yeah, it's a go anywhere approach. It's
a go anywhere approach.
Yeah. I mean, to make a metaphor, it might be bad. I don't feel super qualified to be talking about your backgrounds, military and things, but say, oh well, we can only, we have a military, we can only fight on this terrain and in this weather using these weapons.
You sound like the French, by the way.
Good luck, fellas.
Yeah.
Good luck, fellas. It ain't gonna work out.
There's
long
precedent
term
for that.
Yeah.
Mike, next time we get together, we'll go through patterns of conflict. What you just said is exactly people actually do think that. And it's not just war, it's business, it's investing, it's child rearing, it's everything. They actually completely disregard what it takes to thrive in complex nonlinear environments. And the system of trend following, the systematic approaches to trend following, at least inherently, seem to me to be accounting for all those things, to take advantage of anything and have the agility to go in any which way, given the complex nature of markets.
I want to share a quick story about the French, by the way. This is for Jerry and Mike. I want to make sure I clarify something. So I spent time working with the Air Component Command of the French Air Force. And one of the hardest things I had to do was teach them that, war goes 24 hours a day. It doesn't just work in a 12-hour window, right? So what we had to do is get them prepped up and learn how we fight wars in the U.S. an air campaign through the air tasking order, getting into weeds, the scheme and maneuver for warfare, for air warfare. And what ended up happening a few months after we taught that, they ended up taking the lead in Libya, right? Which was awesome, because this is 10 years ago or more. But I'm just saying, they had a propensity to lean towards, well, it's time to eat and we can't fight a war right now. We got to drink wine. Well, they didn't work out so well for them early on in World War II, but they've really come around. And I think that's a kind of a metaphor or analogy to think about when people trade, right?
Jeez, yeah, that's surprising. I guess not surprising. I don't maybe know my history with the French on. I know what happened in World War II to them, and then
we could also say that trend following is war fighting, and you could take the book War Fighting, and Mike, I can give you a copy of this and show you. Just cross out war fighting and put trend following trading.
Sure, throw it into ChatGPT and say, write this as a trend following book, and boom,
it correlates perfectly. So that's the core Marine doctrinal publication, is Marine Corps doctrinal publication #1, and it's basically creating the cognitive operating system that you have to have as a Marine, whether you're an officer, enlisted, and at every level. It goes back to what you had told me and what you said in that quote, that the cognitive operating system of trend following is what differentiates it from all other forms, and which gives it its long run advantage.
Yes, I agree. I believe that, and I think that's why this podcast is great, because we're talking to you guys who you Mark, who have some market experience, but we're talking about something deeper than the markets here. We're not talking about the markets. We're talking about how to think and behave and, design, and how to approach life, how to think about life, and like the metaphors, just using, translating it into another language that people are more, comfortable with or used to, you grew up with, and to help them get oh yeah, okay, that I know what you're saying now. Like, yeah, that's it. Because I came, same as Jerry, not from the markets, so to speak, in a career only for a short while. But then you had to tell a bunch of people when I started my fund at 26, had to tell a bunch of people about trend following, and they're all older than me and they hadn't heard of it before. So I had to use metaphors and everyday language and things that would resonate. And hopefully some of them would say, oh yeah, okay, now I know what you're saying now. Oh, it's like that. Yeah, it's like that. Boom. No, okay, we got it. Now we're connecting the dots here. So I think when you talk, to some people, they don't have the vocabulary. They don't know exactly what you're saying. So to try not to be too stubborn too with, hey, you need to get this, this way, you need to understand what I'm saying. We're like, all right, well, hold on. Let me just, make a simple metaphor and that's it. It's like a little ABC's book. I got a 3-year-old at home now. They teach all these lessons through different silly cartoon stories, and it's the same stuff, teaching the same lessons, just in different ways, more fun ways.
And Jerry, from your sage viewpoint of, having done this since 1983, I mean, it really does come down to one's cognitive operating system, right? It really does come down to the way someone thinks.
Exactly. One of the things that would frustrate me over the years has been this idea, which it's a bad idea, but it has a grain of truth, I suppose, that you should choose an approach to the markets investing that suits you so you can do it. It's just acknowledge that, well, I'm not going to do it if I don't like it. And I thought that was so backwards. I didn't like it from the very beginning. And I don't really I like to make 1% a month or 2% a month and really smooth. But I had to acknowledge that what I liked more was actually surviving and being successful. And I think if you're asking the market to reward you for a career of trading and investing, then to do it on your own terms, where at the end of the day, you feel really good about it and it really ticked all of your emotional boxes, I think is kind of naive and stupid. So I think that those people should not trade. That's the alternative. If you don't want to do hard things and do the right thing and submit yourself to a set of rules that have worked over the long term, but you're going to be overwhelmed by the daily negativity and emotions of losing money or giving back big profits, then don't trade. I think now, one thing that I would say is purely up to each individual person is deciding how much risk that you want. Are you going to risk, if you trade 100 markets, you're going to risk 1% per trade, 10 basis points per trade. Anything in between is fine, because you do have to follow the rules. And sometimes I've been in situations where I was definitely over trading. Anyone would say that, and my own emotional makeup said that. And so then that led me to not do the trades. I had to scramble and get out of a bunch of positions or override the rules because I was losing too much money. But I don't think that we should expect, I never really desired that. I wanted to be successful and I wanted to do it the right way. And I took pride in doing things that other people thought was really hard. And I thought it was hard too.
I mean, there is a lot of nonconformity that has to, I think, to be as trend follower, I think you'd have to be somewhat of a nonconformist. Am I following that right?
I think that's what we were taught. Don't look for positive feedback. Don't look for praise. You're going to be alone. It's lonely. Don't look for consensus. Be skeptical of consensus. A lot of the turtle trading that never got, I don't think, written about very much and never really practiced outside of the 4 years we were all there was contrary opinion, where Rich would say, if you read about it in the New York Times, then you should be a little worried. But if it's in like your local hometown newspaper, be very worried. And then if you get into a taxi, there was taxis, no Uber back then. And the taxi driver says, what about those soybeans? Mm-hmm. You should just get out of your soybeans right there. And so you kind of combine the trend with maybe using some contrary opinion when people agree with you too much. And most of Wall Street, I really likes to see unanimity and agreement. We're all in this together. And Mike and I we left one thing out. We don't use dynamic position sizing and reducing positions or increasing them based upon volatility, and we trade single stocks. This is another heresy amongst managed futures. You can't trade single stocks. So I've been in so many meetings where it's just a no-go. We're not going to give you money. You're not going to work for us because you trade single stocks and you don't reduce your positions when volatility kicks up. And so we're just like, okay. I've often said, I don't know if classic trend following can really be a successful business. You're always feeling the need to make some compromises. It's difficult.
Ponch, I feel we've once again found people that we can have a conversation with that know everything about John Boyd without knowing anything about John Boyd, because
I'm excited about this.
Yeah, Jerry made
I'm
a lot of
excited.
connections. Yeah, he made a lot of connections there to be or to do. Choose doing over to be part of the system. That's clear. And then, of course, survive and thrive, or survival in a system is the name of the game, right? How do we do that? And that's really what the OODA loop is how do agents survive and thrive with the ever-changing environment?
I mean, it really does come down to that differentiation at how Boyd would look at war, or we could look at business, or Sun Tzu the same way, at the moral, mental, and physical levels. And I know that you all, trend following, when done well, I think, understands all of those things. They understand at the highest level that you do have to have a very clear belief system and philosophical approach to how you look at the volatility, uncertainty, complexity, ambiguity of markets, that you have to have the mental fortitude to be able to stay in the game and follow the rules and not give in to the emotional swings or the psychological swings. And then at the physical level, to structure everything in a way that supports the mental and moral approaches to investing.
Yeah, I think
Back when I first started trading, we would sit in front of a computer and look at the markets and the charts, and you do the trade or you don't do the trade. And if you didn't do the trade or you did it incorrectly and used discretion, everyone knew that you just made a mistake. You're not doing what you should do. Nowadays, it's much more subtle. We can write bad ideas. Jerry used to do these things to make himself feel better. We'll just write that into the rules. So now the rules are no good, and they can claim we're following the rules, and that's what you said I should do. So you have to make sure the rules are what they should be as well, because humans will try to circumvent doing the hard thing, doing the right thing with, I'll just make it a rule and nobody can criticize because I'm following the rules. So a lot has changed in 30 some years.
Jerry, so just kind of following on that, when you look at the 42 years since '83, and you look at the technological change of everything that's happened, of how we look at markets and how we approach markets, what effect have the technological changes had on what people, right or wrong, what they say their philosophy is? Like, in other words, do the philosophies and beliefs get compromised, that the tech has had such an effect on them that they steer in favor of the tech? Or are they still able, regardless of the technological changes, they're still able to stick to a philosophy that sort of pursues the truth within markets, following a rules-based system like you do?
Like I said, I think managed futures has evolved into more complexity, smoothing out the trend following, giving the clients what they're asking for. Can you give me the bit of trend following that I like and eliminate the part that I don't like? And they're trying to do that. I think AI is probably just another bad idea for trend following, but we'll see what happens. But I think to some degree, it's been the addition of the markets and the expansion of the number of I traded 20 markets in 1983. Now we're up to hundreds of markets, stocks, and many more commodities and interest rates and currencies are available. And crypto can be another, maybe a fifth new asset class to put in there. So that's been a welcome. And then the commissions and the execution of our trades, all of the expenses of managing money and trading has gone down. So some of it's good, some of it's not so good. But Mike and I are in the minority here. No one would really, not too many people would agree with us on all of this. It's risk-free.
Tell us more about that. Yeah, tell us more about what you just said. Or Mike, add to that, being in the minority when everybody else is seemingly against you philosophically.
Well, I don't think we have this extra layer. I messaged you. I didn't see if you replied, but before we got going on the podcast here, talking about Boyd, and one of his points that I saw, at the moral level of the culture and trust, okay, you have a system, great. You have a diet and fitness. You have a, you have a diet and a fitness regime. Okay, he's got one. He's got one. He's got one. There's a lot of things that work, within the markets, as far as trading goes at times, but I think what's often very overlooked is that we have, I think especially me and Jerry, is that we have a culture where we're not being pulled in many different directions on, well, we got to change. Well, we got to think about these guys. They're our biggest clients. These are our newest clients. And we want to get these new clients that we haven't got yet. We've been working on them for years now. Like that kind of language and that kind of day-to-day hum and pull. And you don't even know what you're doing anymore. You have to have this is what we do. Is everyone at peace with this? This is what we do. And we can't make a guarantee about what next quarter, next year. And, well, they're trend traders and they're, they've been beating us the last couple of years. Well, what does that mean? We're doing something wrong? No. And at the time, just looking back a few years, 21 and 22 were good years for most, managed futures trend followers. But some had better twins and some had better twos. So if you if you checked in every year, every quarter, and you say, oh, what are you guys doing wrong? We're up 40. You guys are up 2. See, you guys aren't with it anymore. And then, the next year you check in again and they're ahead of you that year. It's like, okay, there's going to be variation on a short-term time frame. Okay, no big deal, but again, this is what we do here. This is how we do it. And these are the ups and downs. We're not telling people, we're not telling ourselves that we expect to be ahead of everyone all the time. That's just, you're going to make yourself insane. And it's not statistically correct. It's not even healthy to expect that. So again, a terrible analogy. I can't.
I don't think so.
I shouldn't even bring it up, but imagine going into battle and saying, and they shot one of our guys. You see, we're doing something wrong. Like, what? No. Of course you're going to have things that go wrong and people are going to get hit. And this is just how it is. That's expected. You don't like it. Try to minimize it, but you're not going to avoid it. And I think what we have today is that people are trying to avoid it.
I see Ponch smiling, and I don't know if this came to you, Ponch, but as Mike was talking, I started thinking about energy maneuverability theory, about how Boyd would shape and design aircraft. And one of the points was to be able to gain and lose energy. And sometimes it looks like you're at a disadvantage and you're actually gaining an advantage unforeseen to your opponent.
Yeah. I was also thinking about Cynefin framework, where we talk about there are no best practices or just good practices, good processes, right? So it's the same thing here. And I think that's what is going on here. The other thing is, we have to separate decisions from outcomes. You can have horrible decisions and have great outcomes, or you can have great decisions and horrible outcomes. It's called complexity, right? So that good process, that good approach doesn't always guarantee you're going to have a fantastic outcome, right? Let me point this out. You and I could drive a car down the street, do everything correctly, not on our phones, paying attention, and still get hit by a car, right? Why is that? Well, the environment gets a vote, right? But we followed a good process. We don't go back and change and go, well, I drove and I didn't text and drive. I didn't do any of that. But so now I'm going to go text and drive. Well, I know every day kids text and drive and they have good outcomes, right? Horrible decision-making, great outcomes. They don't get into car accidents. Yeah, no, Moose, what you brought up about EM theory and everything else, it all connects. It's just, how does it resonate with us? And that's how it resonated with me on trend following.
We'll save that for the next convo. We want to also remind our listeners that Jerry and Mike have a podcast. Tell us about that.
We have Talking Trends podcast where we just, we get hot about certain topics, and then we just get on there and start yelling and ranting and, just kind of venting. It's not an angry podcast or something, but sometimes we're a little miffed, and sometimes we're this and we're that. It's just kind of what's hot at the time. So we get on there. I want to commit to do it weekly, but I feel sometimes that we just are not always hot about something. Sometimes we're just, I don't know. What do you want to talk about? It's kind of, well, if we have nothing, we're not feeling something, then we just, kind of wait for it to bubble, and then we'll get on there when we're charged up. But yeah, I don't know. We got about 30, 40 episodes on there, different topics, and they're usually like relevant for the recent time, like when the topics of around the day we record. So we talk about the
we might be using it for like psychiatry. We're we're counseling each other. We reach a state where we're so frustrated that we get on and do these podcasts. But do we also sometimes talk about fantasy hockey? We kind of compete against each other in fantasy hockey.
Fantasy hockey's
An
big.
adventure that I have dominated over the recent years, but not this year. I'm not dominating, so my spreadsheets are letting me down this year. But do you use a spreadsheet in doing your hockey draft, Mike?
No, I'm all intuition. I just use my inner genius at all.
Not me, not me. I'm all about the back
No.
test.
You see, different system, different. Jerry's won, I think, twice. He beat me last year. I came in second last year. So it's also funny too. My dad has also won twice. So we got the two oldest guys. My dad's 72. Jerry's mid 60s, and what is 67 now, Jerry?
68.
68, and then we got some guys like around my age, around 40, 30s, 40s, that are trying to get to the top. But it's been me, Jerry, and my dad have been the only people I think that have ever won it. Maybe there's been another winner, but we've been doing it like 5, 6, 7 years now, so it's fun. We got a tough league this year. This year's tough for some reason.
We'll have to take a look at that. I got
hockey's
kicked.
fun.
I got kicked out of a fantasy football league. Somebody dropped out. I was a replacement, but I only did it quantitatively, like whoever was the best, whatever. I just auto drafted or whatever, and I won 2 years in a row, and I got booted out.
Wow.
And I didn't know the other guys either. They were older than me, and I didn't get involved in the shit talking and stuff because they weren't my frat brothers from college. They were all like close friends.
All right.
Yeah, congratulations on 2 years, and I get the hell out of here. That's what happened. But
That's funny.
well, hey, for your podcast, I'm going to talk about how to apply how to understand the theories of John Boyd relative to trend following. We got a guy, so
Okay.
happy to keep the conversations going because I think that really there's a lot here, and I know that the people that we interact with from a listener base, from a subscriber base in our Substack, this is going to resonate with a lot of people. And I think trend following and the story of the turtles and the story of trend following, the disciplined approach, I think that will have I think it'll sit well with a lot of people. What do you think, Ponch?
Oh, 100%. I mean, it aligns perfectly well with what Boyd put out there.
I like to hit on that next time we talk. I'll hit on that culture side because Jerry talked about it in the turtle program, and he's said it many times over the years. He was in this pretend environment where you do the right thing, you lose money. That's okay. That's great. Good job, fellas. Just keep doing that. And here in New York, or here, in the big boy investment world, no. You need to make money all the time. And like, if you're losing, you're doing something wrong. Like,
Yeah,
it's just a totally different planet. And that is such, I believe, an underrated part of long-term success. Is that okay? We just keep doing the right things. I'm not pleased with the recent results. I don't like this. I don't like to lose, but we're doing the right things and keep doing this, and we'll be on the winning side. And again, like what other part do you not want to do? You want to trade against the trend? You want to cut your losses? You want to let your losers ride? You want to bet it all on a few ideas? Like, that's how you die. That's not how it works. Not how you're going to succeed long run.
one thing, you're sitting here talking with two scholars of unconventional guerrilla warfare, insurgent warfare. It seems to me that trend following is still very much in an insurgent state. It's still very much a guerrilla movement within the broader conventional movement of markets. And that goes right back to what you talk about, Mike. It's the culture and the philosophy, the belief system, the cognitive space. It wins at the moral level, and then everything else will follow. Unlike the people that focus on the physical level, like you were saying, did we make money? What was our performance? The people that focus on that they're disconnected from the mental and the moral realm, and that's how guerrillas win all the time. That's how insurgents win all the time.
Yep. And maybe
don't-
another metaphors and the spiritual realm, the religious realm of you got your your golden rule: treat others how you want to be treated. Okay, good rule, hard to do.
It's very
hard
simple
to do.
Yeah, go ahead,
10
Jerry.
Commandments, good rules, hard to do.
One of the things that I think I read a book many years ago, 20 years ago, I read this book. I forgot the name of it, but I came away from reading that book making a promise that I wasn't going to follow my performance day to day or minute by minute. And that really helped me quite a bit. And so I have to pretend sometimes when people ask me, well, how is your fund doing? How did it do last month? I have to make something up. And inevitably, people throughout the year will mention something about performance. Oh, yeah, you're making money. Good job. Or you're up a certain percent for the year. But I think you got to understand what you need to do to follow this process and be a process-driven person. And that was one of the things that I seldom look at performance. Every now and then I look at the markets and I look at the positions and I get a sense whether it's good or bad. But a proper systematic approach should have some rules as it relates to what to do when the markets are really, really bad.
Boyd would call that Fingerspitzengefühl, which basically was a translation of a German term, the German military reform movement after Napoleon, when they were trying to figure out how we never let this happen again. And the apex of it was eventually Blitzkrieg over those 100 years of study and reform. But basically, you needed Fingerspitzengefühl, which is a fingertip feeling, an intuition that's built around Einheit, which was mutual trust. So we trust each other, our team managing the funds, or our team managing clients, having the relationship with clients. So it was Einheit, Fingerspitzengefühl. Now, because of trust, we can develop that intuitive feel. Auftrag, which was contract, which is another way of saying that we're driving on intent, and we understand what the intent is, so that we can operate flexibly inside pursuing that intent. And then the last part was Schwerpunkt, or the focus and direction. Where are we focused and directed together? And Boyd studied that because he realized that when facing formidable foes or facing complexity, you had to have those things or else you wouldn't be successful. And you guys are really good examples of exactly what they're talking about in Einheit, Fingerspitzengefühl, Auftrag, and Schwerpunkt, which we might have to put a pin in that one for another conversation. But that's really beautifully what you just described in your own way as it relates to trend following.
Oh, this is really fascinating. I've never been on a podcast where I'm learning so much, and I have so much to look into. Well, I want to hear more about this.
Oh, we just touched the surface, man.
Yeah.
We
haven't gone deep at all.
No.
How have you guys? How did you get involved with Boyd?
I'll go first. So when I just found my original notes from 1995, and he was 2 years from his death. He died in 1997 from an Evolution of the Art of Warfare class, which I took as a sophomore at Marquette University in the Naval ROTC program. I had a Naval ROTC scholarship for the Marine option to become a Marine officer. And then when we go through all of the training at Officer Candidate School and the basic school, and then our respective areas, Boyd was always because he had such impact on our sort of cognitive, our cognitive stance towards warfighting. You were given it from a very much of a how and what, not from a why. And when I stepped out of the military, originally in medical sales, and then 15 years in asset management, everything that I had been taught kept helping me reframe what it was that I was seeing. And I noticed that I was looking at everything different than anybody else, particularly in like 2008. We were on a podcast recently. I could send you the link. I was out in LA recording, and I was interviewed about why I saw things differently in 2008. And the reason was because I had been grounded in this type of training, this kind of thinking. Well, what I realized was I didn't know the whole story. So I started digging and trying to get to the bottom of really what was behind it. When I realized was that we weren't just taught a system of thinking to approach combat, we were actually taught a frame of thinking to approach anything that we do in life that would involve a decision and an action within complex nonlinear environments. And I took it on myself to not only pursue that, to learn more and more, but to try to position myself to differentiate as a wholesaler. Hey, I'm not here to push product. I'm here to show you a different way of thinking that you could apply to markets, you can apply to your client relationships, you can apply to your marketing, your sales, your advertising, et cetera. That's going to be broadly differentiated. That's going to help you see what others don't faster. And that's the journey that led me to run into Ponch back in, 2018, 19, and then eventually going into joining Ponch as a business partner and working on these things collaboratively, because Boyd was insistent that this not be ossified, that this not be set in stone, that you constantly develop and teach and figure out. And as you say, Jerry, learn. We're learning new stuff from John Boyd every day. That's how I wound up through the Marine Corps, because the Marine Corps was the one organization that he actually really did have an outsized influence on.
I'll give you my fluff answer. This is three things, right? It's naval aviation plus military, and I'll talk about that briefly, complexity theory, and ready for this, psychedelic assisted therapies. That's how I came to where we are today with John Boyd. So military or naval aviation does a horrible job teaching you John Boyd. They give you the four-step observe, orient, decide, act. That's never what it was meant to be. It wasn't until I started looking at complexity theory 15 years ago, we came across Knevin, went back. I ended up talking to Chet Richards about complexity theory, saw it in Science, Strategy, and Warfare from Francis Singa, and really start pulling it apart and go, wait a minute, Boyd was not talking or ever was talking about the military and warfare with the OODA loop. He was talking about something else. And that something else is the nature of creativity. It's called it an enacted system, how an agent interacts with its environment. That's what he was trying to figure out. That's what the OODA loop gave us. So that pursuit took me through complexity theory and then psychedelic assisted therapy, opened my eyes up to this thing called the free energy principle, which is just basically John Boyd's OODA loop formalized through math, right? It's what that is at the moment. And that's led us into ecological dynamics, how we interact in sports, or something known as a constraints-led approach, perceptual control theory. There's all these other connecting tissues, if you will, to John Boyd's work. So John Boyd's work is greater than what you can find on the internet. And what you'll find on the internet is a bunch of morons or charlatans pushing you observe, then you orient, then you decide, and then you act. Well, if you provide that to your competition, they're going to get their ass kicked. If you teach the OODA loop like the way you guys are teaching it, and you are, by the way, through trend following, you're going to dominate. And you guys brought that up today. So appreciate your time. This has been awesome. And happy to have other conversations on this.
Our stance from a business standpoint is basically that successful organizations or successful trend following traders, successful coaches, et cetera, they're already doing these things inherently. It's the awareness or showing them the awareness around what it is that they're actually doing. Then their results actually become geometric. They become outsized from even where they're at because they gain a perspective that their competition won't have.
Yeah, no, I think that's great. In sports too, this is why we do it. This is what we do. This is why we do it this way. It's important to know that, especially have that trust internally, especially when things get emotional. You have to have like a foundation to. All right, okay, now I remember this is what we do, and just keep at it, sort of stuff.
Keep at it. Never quit. Never give up the ship, and have a smile on your face going into combat. Marines have a very sick sense of humor. Things like market fluctuations or whatever, we can handle those with a smile on our face. That's kind of the teaching. But back to the point, I mean, only successful people actually gravitate towards these things because they want to understand why. Now, some don't, but then the ones that don't, they're actually, our argument would be that they're actually vulnerable to sudden unpredictable changes in their environment, or a competitor that does grasp these things, because a competitor that does grasp these things becomes that guerrilla fighter that can topple an empire. So
yes,
getting there faster first. So anyway, well, for the purposes of the recording, we'll pause here. We'll no doubt continue this conversation. We'll make sure that we link to your various sites, certainly the podcast. We're both really glad to know you and get to know you better, and see if we can develop some of these concepts further and show people how they can be successful.
Definitely. Great.
Sounds great. Yeah.
It's great talking.
Yep.
All right.
Fantastic. Thanks for having us.